There have been some really interesting developments this week in China ahead of this highly anticipated G20 summit in Argentina. And I got to say, things are not looking good for their economy, especially their bond market. Chinese government now ordering banks also to start buying corporate debt. They want to help that. Think that would help stem the sort of plummeting bond market there. Also, bondholders have agreed to receive payments in the form of pigs, ham. That's right. After one bond went belly up, that's what they were offered. No cash, but come pick up a pig if you want to. Here now to discuss all of this and more, Fox News contributor Liz Peek and Gordon Chang, author of The Coming Collapse of China. Gordon, you wrote the book a while ago, but some really ugly signs here. And a lot of this stuff, I think, has nothing to do with the tariffs, just some of the embedded problems that they had for a long time, but they're really starting to bubble to the surface.
Yeah, the Chinese economy is growing, in reality, 2-3%. In other words, it's growing slower than ours. But they're accumulating debt at least 1.5 times faster, if you believe their numbers. And certainly those numbers are inflated. So essentially, you've got a situation where they cannot service their debt. Now, they control a lot, so they can keep this game going for a long time. But Ying, the company that you just referred to, giving coupons for pigs, that really shows how bad the situation in China is right now.
A report in Bloomberg saying that their distressed bonds now add up to all emerging markets combined, and when the year began, they had zero. Yeah, that's scary stuff.
And here's the thing. As you referenced, this didn't start with the tariff problems. The reason that they have had to back off a long-term reform is because that reform was going on some time ago, and it's because they are way over-indebted, not just private companies, but obviously state-owned enterprises and the government. I mean, it's sort of a pyramidal effect, if you will, of too much debt across the board. So they've been trying to change that, and the result has been a slowing economy. So it's a little bit of a difficult situation that they're in.
I did. Did you guys see the Xi's speech? Yeah. I watched it. I missed my Donovan, but I'll catch up later. But what struck me is some of the promises, not specifics, but promises. So last night, they announced American Express is going to be able to develop a network there with a 50-50 Chinese partnership. But they said they would allow this in 2012, right? They would open these markets up. Do you see that as an olive branch, or is that a gimmick?
Well, it's sort of a gimmick and an olive branch at the same time. You know, China promised to actually open up their payments market in, I think, 2006. They lost the WTO, World Trade Organization case in 2012. You know, with Wilbur Ross's promise last year, that 100-day deal, they promised to open up the market. They still, you know, American Express is still not issuing cards in China. So, you know, this is really just trying to stretch things out. But the fact that they said they gave the okay last night, I mean, ahead of the G20 meeting, maybe I'm being too optimistic here? Yeah, well, I think they do this all the time when, first of all, they've got the slowing economy, as Liz talks about, but also they do want to have sort of, you know, a good talking point going into the G20. I don't know if this is significant because under Xi Jinping, they've been closing up their economy. They've been going with more state control. And so this is 6 years of regressive movement. And so they've had one olive branch. Big deal.
And it is interesting because Xi Jinping recently at the import fair, I love the fact that they had an import fair where everyone else in the world has an export fair, made a lot of promises about the change in policies that would allow
lower tariffs.
Exactly.
Lower
all kinds
customs,
of things they were going to do.
Respecting foreign laws.
And no more, and, you know, building things themselves instead of stealing intellectual capital. All these things. It was, honestly, it was sort of like fake news. It was here's all the things we're doing, and you look at them all and you go, no, they're really not doing any of those things.
They're not doing all those things. And also, if you want to increase imports, all China has to do is take off its non-tariff barriers and all of its predatory practices. They don't need a big propaganda event, which is what they did.
Today, Peter Navarro was at the Center for Strategic and International Studies. Gave a real Peter Navarro-type speech. Yeah. Some people think it helped put some pressure in the market. I mean, he's really, really talking tough. Again, you know, if there are positive overtures heading into a meeting like this, that would make sense. But every time Peter talks, it's sort of that kind of tough language that scares the hell out of Wall Street. By the way, he took Goldman Sachs and Wall Street to task also along with this.
Well, that's exactly right. I mean, it is a little tough cop, good cop, bad cop, whatever it is, going into the G20 at the end of this month.
But it's one thing to want to use these as a tactic for fair trade, free trade, you know, and another thing to want to destroy a country.
No, I don't think that there's any appetite in this administration for unsettling China's growth, right? I mean, China is growing,
we just want access
albeit
to it.
slowly. We want fair trade.
Right.
I mean, that's not a hard concept to understand.
Real quick, because we give me to wrap.
Yeah, I think the point is Peter is saying, look, China's doing things which are completely unacceptable, stealing intellectual property, predatory trade practices that clearly violate WTO. They've got to stop. And this is not a question of bringing China down. This is just a question of fair trade, of what China promised us.
So you like that Peter Navarro, Clint Eastwood approach?
Make my day.
Well, I mean, Xi Jinping's on notice. That's what it accomplished, right?
Gordon, Liz, thank you both very much.
Thank
Appreciate
you.
it.